If you own Tesla, Palantir, SoFi, or Nvidia, I'm going to cover all 4 stocks, what's going to happen to them for the rest of June, the new news that's coming out on these stocks, my personal opinion on the technicals, the fundamentals, and the latest research I have done. No BS, I respect your time, so let's get to the point and let's get started. Let's talk about Palantir. So other companies talk about AI, but Palantir actually gets billion-dollar contracts with the government and it gets them signed off, okay? That's the most important thing. Palantir right now is trading for $132 per share, and this stock has had a very strong performance over the last 6 months, and over the last 1 month has had a very solid, just absolutely solid 13% return. So if you look at the chart, there's actually some very clear support and resistance for Palantir. I'm going to zoom in here. You can see this very strong bounce from $119 per share. Right now, Palantir has a strong $120 per share support, and it is hitting the top of the range right now at $132. I expect the stock to trade sideways in the short term, but in the long term, I'm absolutely bullish. I'm super freaking bullish, and you should be buying this bicep over tricep. Now, one thing I will say is, did you guys see the latest riots in Los Angeles and what's going on with, the Mexican flags going on, and basically the federal response was crazy. They deployed National Guards, starting with 300 troops and rapidly expanding to 4,000. The reason why I'm bringing this up, okay, I'm not bringing this up because I'm political. I could care less about politics. I'm just trying to make you some money. Reason I'm bringing up the whole situation in the riots is because Palantir, PLTR, has a contract. ICE has awarded Palantir $29.8 to $30 million contract to build Immigration OS. So this is going to be a real-time tracking platform for visa overstays and self-deportations, right? So you can see how much of an issue immigration is, and yeah, there's just a lot of money to be made. That's the simple point of it, okay? The system is expected to prototype by September 2025, so in the next couple of months here, and operate through 2027, fueling heated debate over privacy and surveillance. So again, I don't really care the politics. I'm just saying there is money to be made. Palantir is going to have a contract that's $30 million over the next 2 years. And guess what's going to happen? Do you think immigration is going to become better? Probably not. There's probably still going to be issues. For sure there's going to be issues. And Palantir is going to win another contract. So we just basically got another little income stream, a little bit of income stream coming in for Palantir. And this is exactly why this type of new news coming into the market, these issues, is the opportunity. Palantir, AI, building apps, helping the government. It has its hands deep in the pockets of the government, okay? Now, looking at their customer and growth metrics right here, I have total customers it's currently at almost 500. It's at 497, okay? So by the way, this represents a 42% increase year over year. So that's a lot of customers built in 1 year. That's exactly why the valuation seems or is high for Palantir. It's because clearly they're growing at an unprecedented rate and they're innovating like no other. So their top 20 customers, by the way, account for 35% of the total revenue. I would like to see that be a little bit more diversified, and they are working on that. Of course, it's hard to diversify when you have so many huge government contracts. Really, as the public sector, there's so many private companies out there. But when it comes to government contracts, of course, it is going to be a little bit more difficult to diversify. But the good news is you don't really need to diversify when you're working with a large, stable entity like the government. Now, average revenue per customer, the top 20, is $50 million annually. So like I said, $30 to $100 million. Pretty wild, right? Pretty wild. Now, remaining deal value, they have $1.2 billion in future contracted revenue. So we have a very strong pipeline here. Now, in terms of efficiency and spend, I want to talk about this because I look deep into the financials. Stock market and trading is all about looking at the financials and the numbers. Sales and marketing spend was about 20% of revenue. So it is slightly dropping. All the metrics that I look for, guys, they're all improving. Diversification and then cost of revenue is also very important. R&D, which is research and development, is $155 million quarterly. And it's pretty high, but again, we have one of the most innovative companies in the entire world, so that's fine. Now, stock-based compensation, very important. It has actually gone down significantly year over year now. It's kind of in that $100 million per quarter range. And Palantir relies on their employees a lot. It's a tech company, right? It's a tech company, so they need their employees are the most valuable. Now, they're already super profitable, they're cash rich, and they're scaling faster than most SaaS companies, right? SaaS is software as a service. Obviously, I have many IT guys that I'm coaching and many IT viewers, but for those that don't know, SaaS is software as a service, and it's one of the best like vehicles and best types of businesses because it has such high multiples. So because Palantir is AI and SaaS, again, that's why the PE ratio is justified. It's very high, but it's also justified because it'll dramatically go down in the future. Now, Alex Karp said we're the only company in the world that can deploy AI at scale in defense and commercial sector simultaneously. So again, this guy's just flexing. He's just like literally going bicep over tricep, guys, come at me. I'm gonna become basically as rich as Elon Musk, and I'm gonna be one of the richest men in the world. That's what Alex Karp, that's what he's saying. He's flexing, he's coming in with huge confidence, massive confidence, and he's saying, I can do it all. I could do commercial, I could do private, I could do AI, I can close $100 million deals, and I can keep them coming. Not just close it one time, okay? Not just like, oh, I promise I'll do this. Now, he does it, which is insane because this man he may be one of the most powerful men in the future. He may be. Palantir claims its platforms are 5 to 10 times faster to deploy than traditional enterprise software due to modular architecture. So they have the core components of a competitive moat, okay? A competitive moat is they can beat all competitors, not that they really even have many competitors, but it's hard to compete with. Once they're in the organization, they are sticky, they're there. So internal reports suggest that AIP, or the artificial intelligence platform, they can reduce decision-making time in complex environments by up to 90%. So if you think about the value that Palantir has, it's insane. And that's why the financials speak for themselves. The revenue is $705 million. Government revenue was $369 million. Commercial revenue was $336 million. US commercial revenue was up 40% year over year. Adjusted operating margin is 36%. You know how wild that is? Operating margin of 36% is, yeah, it's exactly the tech companies that we want to be invested in. You know, free cash flow, $140 million. And real quick, this is going, if this doesn't convince you, and I'm not trying to sell you anything, by the way, I'm just trying to give you good information, good, bad, and objective view of my opinion. I don't really care. You do whatever you want with your money. I'm not a financial advisor. I'm just a guy that gets really good results, option trading and investing. So just want to point that out there. I'm not sponsored by nobody. But look, this will convince you, I think, in a funny way. Cash on hand is $3.3 billion. They have virtually no debt. The cash that they have on hand, I have this in my notes right here, is more than countries have in their reserves. Belize has 1.1 billion. Moldova, where my parents are from, and I was visiting Moldova recently, they have $3.1 billion in reserve. Palantir has more than the country that I'm from, okay? Georgia, the country Georgia, not the state, Georgia, in the Caucasus Mountains, right? That region, $2.8 billion in reserve. Armenia, $2.7 billion. And of course, Palantir completely crushes many African countries. But legit, this company has more cash than countries have in reserve, okay? And they have virtually no long-term debt. All right, I think I went long enough. Let's go into Nvidia. I want to show you the Nvidia chart. I'll try to make this video a little shorter, but I wanted to put in a lot of research into Palantir. Nvidia is very simple, right? So Nvidia has had really good performance. The momentum is great, and this stock is heading towards $150 per share. The revenue was very strong for Nvidia at $44 billion. So they came in above expectations, is exactly what I said. You guys watched my video. We got a lot of views on the video pre-earnings where I said you want to be in call options. So congrats on that for you subscribers. Good job. They beat earnings, and I think that we're going to continue to have the same track record going forward. Data center sales was up 73% year over year. And really, if you look at the China setback, it is significant. You know, $8 billion was lost on H20 export ban. So, you know, there's competition with China where America doesn't really want to make it easy for them. But I think some of that will be lifted at some point because the money is just way too big. Now, if you look at another interesting trend for Nvidia is just soaring demand in inference. So Nvidia exec Ian Buck detailed a massive surge in AI inference needs driven by reasoning models from OpenAI. Okay, so ChatGPT, Google, Meta, and other tech companies, right? The big hyperscalers, they're going to require 100 times more compute than older models. So Nvidia is really that infrastructure, and they're providing the chips necessary for these hyperscalers to do their thing, right? So again, very, very bullish, as well as global AI expansion. Nvidia is building a supercomputing across Europe, which is deepening their AI investments in UK, Germany, and France. Western Europe. I'm in Eastern Europe. So they're developing Western Europe, and eventually it's going to come over east as well. Now, in May, we did see a huge rise in Nvidia. And again, I mean, look, this stock was way too cheap. I was saying under $100 per share, you got to be crazy not to be invested in Nvidia. And now you would have grown 40% of your money. So yeah, timing in the market is, of course, crucial. But yeah, like this stock still has more room to run. I can see it hitting all-time highs and just continuing to $200 per share. We saw that in May we had a huge rise, and I think a lot of that was because now there's a little bit of easing issues between U.S. and China tariff export restrictions. There's a little bit of an easing on that situation. And also Nvidia announced a major AI chip deal with Saudi Arabia. So this is really a signal for diversification that they have kind of like a Palantir. Now they have contracts with the governments, right? And I think that's why we're up. We're seeing that the Middle East is obviously becoming incredibly rich, right? We have Middle Eastern countries growing rapidly in wealth. And yeah, they're going to be using AI, etc. And that's going to be fueling a lot of NVIDIA's future demand. So this helped NVIDIA basically bounce over 40%. I mean, imagine buying it for 95 bucks. Now we're at 143. That's basically even a 50% return right there. So really, going forward, the biggest catalyst will be China. So all eyes on China because some of the news coming out here, by the way, Jensen is in, he has a GTC conference right now. And there's also going to be some really cool insights there, especially as he travels and talks more about the company and its future endeavors. I think more investors are going to be on board. There are already many on board, but even more. So I see the stock heading to $200. And this week and next week, I think it's still smart to buy leap options on Nvidia. So I have a leap video I'll put in the description or at the end of this video. But simply said, you want to have long-term exposure into Nvidia. All right. Next stock I want to cover is going to be SoFi. So SoFi, I made a lot of money on SoFi very safely, very consistently. This stock, although it's not going up to $50 per share and you're becoming rich overnight, it is providing a really good return in the last 1 month of 9%. And that's not even factoring in the options that I'm trading on SoFi. So the company has really carved out a unique competitive position in the fintech world by operating like a tech company with the bank charter, right? So they're not just a digital lender, they're kind of an all-in-one financial super app, okay? And that's really what is exciting as an investor in SoFi is they're bundling banking, lending, investing, insurance, and credit all in one mobile-first platform. And this is very innovative and unique. And this allows for cross-selling and retention, okay? So why are those two things important? Well, retention is important because a customer continuing to be a customer is obviously recurring cash flow and money, but then cross-selling is essentially like when you go get your tires changed, you're getting your car vehicle changed, right? You get your tires changed and then they sell you on the oil change, right? So it's essentially, that's what a cross-sale is. A cross-sale is just adding an additional product or service to a customer that has already purchased something. And that's what SoFi is exceptionally talented at. So once a user opens a checking account or is taking out a loan, they're most likely there to stay, but they're also likely to explore other products, which really benefits SoFi. And that's where the vertical integration comes into play. SoFi owns SoFi Bank, which is a real bank, they're not just partnered with one, okay? So that's really key difference here. They're not just partnered with the bank, they are a real bank. So this allows them to hold deposits directly, which actually lowers funding costs, okay? Make loans for its own balance sheet, capture full spread and margin without a third-party fees. So like they're getting money and then they're loaning money and they're printing it. It's essentially, banks essentially print money in a way because they're loaning out money, they're getting a spread, they're getting interest. So money makes money, all right? That's why the rich get richer. Pretty easy to get richer when you're already rich. Like it's not that hard for me to grow my portfolio from, I was at like $2,000 when I started. I'm in millions now. We've had some volatility this year, but eventually my portfolio is going to be at 5 million, 6 million, etc. It's because time is the most important factor. And when you have capital, it's easier to compound that capital. It is also why when I work with folks and I have my private client program and I do one-on-one coaching, you know, the more money someone has, obviously it makes my job as a coach much easier to scale them even further. So money makes more money. The rich get richer. And SoFi is just making a lot of money. They operate like a tech company with a bank financial backbone, and this combination is just super powerful. And they also have a member flywheel, so that's basically where their growth strategy revolves around bringing in members. They're exceptionally talented at bringing in a lot of new members. So they're at almost 11 million members now, and they start with one product, right? Just come in. Just go through the door, Mr. Customer. Just please come through the door. And when you come through the door, they have some tea, they got some cookies for you, and they got a little bit of back massage. And they're like, boom, how about you take a student loan? How about you take a credit card? How about a home loan? How about refinancing? And then all of a sudden, you're again knee deep in a bunch of products. And it's cool because they personalize the cross-selling, right? They get to know you, they build a relationship, and there's nothing wrong with that. It's all about the money, right? Let's be honest. Let's be straightforward here. Every business, every person just wants money. And if you can provide a good experience for a customer, why not? Why not? Cross-sell them. If they've had a good experience, offer them more. That's helping, in my opinion. You're helping someone, okay? So everyone can make money. It's a net positive. That's how capitalism works. It's a net positive for everyone. And when you look at SoFi, they have a very good LTV, lifetime value, okay? It's a very important business term. If you're a business owner, you obviously know this. If you're not a business owner and you're IT, doctor, lawyer, which is a lot of you guys, LTV is essentially you get a customer in for, say, whatever price, right? LTV is how much are they worth over their entire life. And SoFi is very good at maximizing that. And they're also very good at bringing in people at a very low cost. Their acquisition cost or CAC, right? It's called cost of acquisition. So the lower that is, the better. And SoFi is really good at that because SoFi uses referral rewards, sponsorships like SoFi Stadium, partnerships with NFL and influencers, and also SEO-heavy content marketing, right? Content marketing is where it's at. So all this leads to lower CAC, cost of acquisition, than traditional banks. So they're just going to put the banks out of business eventually, right? Not over one day or 1 week or 1 year, but they're taking a slice of the market, which is why I think that if you look this week, SoFi is going to probably add like thousands and thousands of customers. We won't know about it until the next earnings, but every single week, this week included, they're adding tens of thousands of customers to their platform, all right? Their brand and positioning is also very, very interesting, and their tech-first product rollout, for example, like they had the robo-advisory with no management fees, they had crypto investing directly in the app, they have buy now, pay later partnerships. I mean, all of this stuff is very unique. So I would be looking at investing in SoFi. Very simple. You sell some put options, get an entry into SoFi. You don't have to buy stock outright. Just sell a put option at 14, get paid to buy SoFi at 14. Like, you know, this stuff isn't rocket science. Straightforward. Keep it simple. Option strategies that work. Selling puts, right? I have a guide on how to make $10,000 a month selling puts, and it's not that difficult. Of course, you need capital to do so. You need to have 100 shares. Each contract's 100 shares. But really simple. Sell put options on SoFi, 14, and yeah, just enjoy the money that they're making through their rewards ecosystem. They have referrals, they have all this stuff that is designed to basically get customers and retain customers. And this is a business that, you know, I would say you want to be invested in because of their low acquisition costs and their high LTV. Let's move over into the fourth stock, which is Tesla. And what we have just witnessed is that Elon Musk actually is feeling regret over, saying that Trump was with Mr. Epstein and that Trump's a bad man. And then they had this whole drama. They had a breakup. And, I'm not surprised because Elon seems to kind of be not in the most stable place. But I think he's kind of realized, hey, I'm sorry, I didn't really mean to say a lot of this stuff. He regrets that. And the market's reacting very favorably. So Tesla has had a really nice rebound. And I think the stock has some stability here finally, which is what I said. I said that essentially we're selling puts on Tesla. We're doing the poor man's covered call on Tesla. And Tesla, I'm not super bearish on, but I'm also not super bullish on it either. But the recovery actually happened a lot faster than I thought. And that's why, by the way, you know what's crazy? The YouTube algorithm is crazy that I made a video that showed you guys how to make thousands of dollars, yet no one really watched it. It's my Tesla video, 3 traits to make on Tesla. Title or thumbnail wasn't clickbaity enough. I wanted to be honest and just kind of make it really simple. No one clicked on it. Yet that video freaking printed money. All right, it's kind of upsetting because you have to, all the YouTubers, we have to clickbait. Sorry, but it just shows you. I put thousands of dollars in the pockets of people, but we didn't get that many views on that video. And I'm more so upset because the trades that I made, I think were honestly life-changing. I said that Tesla's gonna recover quickly, but it recovered even quicker than I thought. So the position that I made has already made over 10% in less than a week. 10%. If you have a 100K portfolio, I put $10,000 in your pocket. So hopefully, yeah, you're subscribed because each video I make, it's urgent if you want to make money. You guys that make fun when I put urgent in the title, no, it literally is making a lot of money if you're following. All right, quickly give you the summary of Tesla and where I see it heading. I really like their unique advantages. Obviously, Tesla controls the entire value chain. They make their own batteries, they design their own chips, they build proprietary software, and they sell direct to consumers. So they own the entire supply chain, and this is very powerful. Now, they also have energy ecosystem play. So they have solar, energy storage, and vehicle to grid potential, right? So all of this multiple streams of income is very powerful for Tesla. Obviously, what I'm looking out for and what everyone is excited about is full self-driving. So Tesla sells over-the-air software upgrades like full self-driving and robotaxi. When this stuff continues to mature, it's going to be really game changer for Tesla. Now, Tesla is a lifestyle brand, kind of like Apple. It's not just a car company. So yeah, their brand is super important. That's why Tesla is worth what it's worth. I don't care if you're liberal or you're a conservative. Again, politics don't matter. I do think a lot of the members I have do lean conservative though. You cannot dispute that Tesla has a huge brand and they're valued because of their marketing. Like them or hate them, Tesla's brand is incredibly strong, and that's why they're worth what they are worth, regardless of what political side that you lean on, okay? The social presence that Elon Musk has is absolutely unrivaled. It is free viral marketing. Views on social media is equal to dollars. That's why everyone is chasing views and attention. Elon Musk personally has the freaking hugest brand himself. He's an influencer. That's a good thing. That's a good thing because the more views he gets and the more attention he gets, the more Tesla attention gets, and that's fine. That's good, right? So it's a good thing for Tesla. So yeah, I'm really looking forward to Tesla continuing to sell more cars, but I'm also really looking forward to their software, their technology, and for Mr. Elon Musk to create some drama, because this drama is actually good and bad drama. It's publicity for Tesla. So I think Tesla stock is, you know, it's kind of shocking. I don't think they're going to recover over 350 like in the next 1 or 2 weeks. This week, I'm looking for Tesla to stabilize. So I think it's a continued good play to sell $300 put options on. That's my update. Make sure that you're subscribed for more updates that are urgent and important like this one. Catch you in the next one.